Critical mineral supply is the greatest concern for electric vehicle manufacturers, especially in Europe and US, with the top graphite miners on the ASX being up between 10 and 60% over the last month. The best are making the transition from explorer to producer. This is Finer Market Points, where we connect the leading market themes with the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which companies you're trading and why in that graphite space. Now, lithium and more recently nickel, their supply concerns have been Elon Musk's tweets, and that has buoyed and moved and pushed those markets around, particularly just before he's announced that he's bought yet another nickel miner to mop up that supply chain, which has been happening a lot in Europe outside of what Elon Musk has been doing. So this has been happening, especially in the European markets, and we're going to look at those top companies here. But we want to understand what else has been happening in this graphite market to understand why it's been happening so much and more rapidly in the last few years. Now, graphite market and mining supply and firms have been working on integration because we all know electric vehicles use graphite, lithium, cobalt, and nickel. But much of the electric vehicle market has been using graphite coming from China because historically 70% has been mined in China, and close to 100% of the anode precursor material used in lithium ion batteries is processed there. China has become a net importer of graphite in 2019. This was after the opening of Australian-based Syrah Resources, a Lama mine in Mozambique in the second half of 2019. You can see here on the chart Syrah Resources with that strong run up in November and December of 2020, somewhat plateauing in the first quarter and then being on the nose in May this year. That's Syrah Resources. But what we want to do is have a look at the top performers in this last month. TLG is up 10%, contrast to Syrah Resource down 10%. This is Talga Group. TLG, the ticker, 10% for the gain on the month. Now, what we see with Talga is that they are building a European battery anode and graphene additive supply chain. They've got vertical integration, including ownership of several high-grade Swedish graphite projects, and that provides security of their supply. Think Elon Musk and what he's doing with nickel and lithium and the like. So we do see a strong movement, and TLG, you can see their share price. They had that rally October, November last year. We can see this strong run-up, but we have seen it drift back in that first quarter. Syrah flatline, Talga's dropped, but it's come back up for a bit of a flick in the last month or so. We want to see the next best performer, BKT. BlackRock Mining, BKT's a ticker, and their performance is 13%. We'll put this up here so you can see this monthly performance here. Zoom in so you can see that. BKT, BlackRock Mining. Now, the Tanzanian government, FCC, being Fair Competition Commission, has provided approval for the 15% equity investment from POSCO. This is for US $7.5 million to be injected into the company. These funds will be used to get started on the updated production cost estimates, because what they're also talking about at the same time is those offtake agreements. So have them happening concurrently, shore up the offtake agreements, but also understand what it's going to cost to get it out of the ground, move from explorer to producer. That 7.5 million will go a long way to getting that underway. The next best performer is SRK, Strike Resources, being third position in the graphite miners on the ASX in the last month, 16.36% gains. This company is not a graphite miner anymore. They've spun out their lithium and graphite into LEL that listed on the ASX on the 17th of May. This company is now known for their lithium brine in northwest Argentina, which is near the ASX heavyweight Orocobre in that space. We're going to have a look at the charts there. So ORE being a strong runner. We do see that Orocobre, ORE, has had that strong run up. That's the space that they're working in. This has given a lift into Strike Resources because they've spun off these assets. But they also have Burke Graphite Project in Queensland. So that's where they come into the graphite space. But no longer. This will be the last time we look at them as a graphite miner because they've been replaced with LEL, which you can see on the chart here is a new listing to the ASX. We'll put that in here, but you will not see on the comparison from the monthly table on the right-hand side, LEL, lithium, having any performance returns because there's such a new listing. But number two, the second best performer on the ASX in the graphite space over the last month is Castle Minerals. CDT, 28.77% return, highlighting there on the right-hand side in that monthly column. The left-hand side shows a chart, low liquidity, small capitalization company, high leverage to this positive movement. So 1 cent to 1.6 to 1.8, very rapid movements, very rapid gains, but small price and small valuation. Bit harder to trade, but what we're looking at here is Castle. They're the Perth-based company with West Australian gold projects and the Ghana graphite projects. We'll bring this up on screen to have an understanding of what these projects are. There's the Ghana project. So the rest of their projects that see a lot of media attention are also these gold ones in Western Australia. But what we're focusing here is graphite and other minerals being in that Ghana project. That is CDT for the second best performer on the ASX. Now we move over to Vault Resources. VRC is their ticker. Their performance has been the best. We're looking at movements from 1.6 cents up to 4 cents. Very solid move. 69% gain in the rolling month. VRC has put on that to become pole position. They are now a producer. This is the critical transition that we're talking about. Their supply chains. You want to know where the Explorer is, how close they are to producing, but with their ZG Group announcement that we'll have a look at in a second, that has put them into the producer status. Bring that onto screen. So spheronized purified graphite, SPG, is what they're focusing on. But this announcement that came out here, you can see the 14th of May, the Vault to acquire European graphite business following completion of due diligence. Acquisition of 70% of ZG Group. Their due diligence was completed. They're working with Deloitte in Ukraine to get that across the board. Vault to formally notify vendors. That has now happened. 10 business days from formal notification to settle the transaction to acquire 70% interest in the ZG Group. ZG Group acquisition to transform Vault into one of the few ASX-listed graphite producers. Completion of the acquisition will position Vault ahead of most of its peer graphite companies to become a graphite producer without the usual time and risk related to complete greenfield project financing. Think back to the other companies that we've just looked at there, raising 7.5 million to do exactly what Vault does not need to do now. ZG Group planning to produce LIB, anode material, SPG, to create the only European integrated mine and SPG producer. Critical movement, that's high value, green, purified, 99.5% TGC product. That's why VGC has shot up significantly and is 69% gain versus the 28, 16, 10, 10, and minus 10 returns for the other peers within that space. That's the strongest performer of the ASX, being the graphite miners here. You can like the video to support the channel, click subscribe for updates, and let us know in the comments below which graphite miners you're trading and why.